So good evening, everyone, and welcome to this webinar hosted by Rainmaker Marketing. I know quite a few of you are still joining, so we'll just get into the welcomes and introductions. My name is Stefan Boyta, and I'm Director of Rainmaker Marketing, and hope that all of you are doing well, approaching Spring Day and the last quarter of 2023, which is pretty scary in itself, and hope it's been an amazing year for all of you and a wonderful last quarter. And the topic for tonight, in line with many of the webinars we've done over the last couple of years, is really obviously to try and find a topic that is super topical, and really to invite the best panelists that we can possibly find to give you unique insights that you wouldn't be able to get anywhere else. And I think tonight is we are super proud to have the caliber of the panelists that we have in front of us to discuss the rising trend of women in property ownership and in the property sector as a whole. So I think we all know that Women's Month is all about celebrating the extraordinary roles that women play in every sphere of society. And tonight, we really want to celebrate the extraordinary roles that women play in all sectors of the property market. I'm fortunate to work within a business that is 80% women, and I get to see the incredible impact that women have in the property sector every single day. And today is really about how we unpack unique insights with a panel that is across all the different sectors: residential, commercial, retail, and industrial. And I think the whole thing about tonight is that if you're watching this webinar and you feel inspired to elevate your growth in the property sector, or you have more insight or knowledge into how to invest in property, then we've achieved our objective in terms of discussion. We're going to limit this to an hour, and we're not going to be able to get to everything. It might be a great opportunity to do a follow-on or chapter 2 to really get into further things. There's only so much you can cover with the caliber of people we have, but we're going to give it our best crack. And I think just in terms of just some structure, so like I said, 60 minutes max. We all know everyone's time is super valuable. We really encourage question and answers. So please, to those of you watching, please share or post any questions and answers in the chat box at the bottom, and I'll direct them to the different panelists. We are going to keep this conversational and relaxed. We will be doing a recording of this discussion, and we'll be circulating that to all of you tomorrow, and you can forward it on to friends or family or anyone that you feel would find value in the discussion. And then we've only got one rule in these webinars, and that it's no hard sell, and it's about giving people insights that they wouldn't be able to get anywhere else. And that's really it. I know I've encouraged the ladies in the chat to be open about their dialogue, and so I'm hoping I get a word in, but we'll see how that goes. Not the end of the world if I don't. But yeah, I think just by way of introduction in terms of the panel, firstly, Pamela Naidu, who's the Director of Sales and Marketing at the Vemco Group. Hi, Pam.
Hi, Steph.
Kim Favkag, who's the Chief Investment Officer for Spear REIT. Thanks very much for joining us, Kim.
You're welcome. Thanks for having me.
Samantha Midley, who's Analysis and Investor Relations for Liberty 2 Degrees, which is also a JSE listed REIT. And I think we'll probably unpack what that means a little bit later. Hi, Samantha.
Hi, thanks.
Kaukela Mamabolo, who's the Director of Emerging African Property Holdings.
Hello, everyone. Thank you for having me.
And then Marianne Victor, who's the CEO and founder of Ancora Retail.
Hi, everyone.
Okay, so I think we're just going to jump straight into it. And like I said, we'll try to get to as many of the topics as possible. We want to cover ownership, how to go about it, how women have shaped the property industry in South Africa and further abroad, trends in retail, residential, and so much more. So I'm going to kick off on your side. I think it's a fact that you're the first female member of the Spear Executive Committee. And just in your opinion, how the rise of women within the property sector has positively impacted the industry.
Thanks, Steph. I think it's not just in the property sector, but in any sector, really. The inclusion and the rise of women certainly has a positive impact on any organization. Women just tend to think differently and have a special skill set that I believe complements our male counterparts. and women add value at any level in an organization.
Okay, no, thanks. And then Kakela, I mean, you've been in the industry for 20 years, and how have you seen it change over that period?
Sure, it's a lot. 20 years is a lot of time, eh? Thanks for I did go to dye my hair so that you don't see my gray yesterday. You know, very interesting. And following on, I'm gonna start with something key because of the topic we have today. Is that when I was starting, this is around when Women's Property Network (WPN) was also starting, and at the time, it had women who were mostly sitting in executive positions. Actually, it was probably limited to that. But now we're seeing a much different organization, which even has students at some point. So that was the big thing that I started in the industry in. But at the time, the industry was also dominated by probably 4 big institutions, besides the banks, and those were your life pension funds. During that time, we also then started seeing the journey towards the first REITs being formed, and to now sitting in the billions in terms of value. What we've also picked up throughout the years is that so the commercial market, the institutions would tend to be more in office, retail, and industrial, and maybe some specialty. But now we've seen the increase in some private equity, some unlisted REITs, which are going into student accommodation, hospitals, as well as private equity funds that have come in, which are also going to niche things. Residential is also coming in, but largely the residential, of course, has remained in the smaller groupings. But the one also other interesting trend is that the retail, now the underserviced markets such as townships and rurals are also getting lots of attention. And that is possibly where people are making money in because of the demand. And there's also then the SASSA grants, which are helping the consumer there. But also from a point of view is that more and more the property sector is shying away from, we're looking at different funding instruments now. We've got much more broader in terms of, if you're looking at the DFIs are coming in, NHFC, GPFs, there's a SHRA, on top of the traditional banks, the MES fundings have increased. But increasingly, we are also looking at the wider capital market world, the pension funds and retirement funds, to go look for that money, unlike before, especially on the direct property side, when the REITs will go via the asset managers. But now there's more activity that we're seeing that money is being raised there. And of course, of recent, we've had the PPRA, which is the latest organization to join. And of course, the REIT organizer was also launched throughout the years there. So this is broadly what I'm giving you. We could go into more detail, but I think also the research we have is much better than before, because we're now able to track the many years since the SAPOAs and the MSCI started, to see the changes in the industry. And of course, we've got way more women players, and for which I'm sharing today with. So that's also very nice to see. And transformation. Oh, sorry, I forgot to also mention that the property charter was gazetted in 2012, I think. Yeah. So there's been lots that has happened throughout. Just the tip of the iceberg. There's more we can talk about.
No, but I think you've done a really good job of summarizing it. And I think that is a big thing. Massive transformation in the industry, a lot more diversity in terms of the offering, and I think a lot more opportunities all around. And I mean, I think, Marianka, just on that note, I mean, I think we all know that property is generally about bigger picture thinking and bigger visions. So, I mean, what would your advice be to women out there who've got a vision or idea and want to turn it into reality?
So thanks, Steph. I think that's probably the key to everything, is we all have ideas. We have a passion to create something, right? And it's not so simple to realize that passion. And I think for women, especially me, it started with taking small steps, and I did something every day. I read an amazing book that I definitely recommend, especially to women, called Girls Stop Apologizing by Rachel Hollis. And what it did is it gave me the tools to not think about my idea, but to realize it in bite-sized pieces. I think secondly, that as women, we often already feel maybe a little bit threatened to ask for advice because we want to come across like we know all of it. But one of the biggest lessons I learned in my career so far is that there's always someone that knows what you don't know. You just need to find them. And often the biggest problems I sat with whilst imagining a vision, and I'm not specifically talking about just retail. I think it's in business, a retail business, a shopping center, whatever vision you might have. It's whatever you struggle with, there's someone that is very specialized in that specific thing. And you just need to figure out where to find them and what they're called. And once you've got that skill coupled with your vision, you start realizing it. I almost also want to just talk about the fact that a bit more specifically towards retail, it's a puzzle. And it's an almost impossible puzzle to put a shopping center together or to put a retail concept together from scratch when you've got an idea in your head. It might sound simple, but there's so many tick boxes and things that need to align perfectly, and they just don't. That's the reality. They just don't. And often we want to see this perfect puzzle picture. We don't want to make a mistake. We all have a little level of ego, and we want to make sure that that vision that we've got is executed to perfection, especially as women. And I think that's one of our biggest problems, because we can't see the perfect picture, we often just don't get started. And you need to build one puzzle at a time. And somehow what I've learned in the last 5 years is, because I'm envisaging the future, I want to have it all ticked, and I have to do one thing for the other thing to fall in place, and then my vision starts changing. So you need to be a little bit more adaptable in what you think your vision is, how you want to execute it. But my best advice is just start one small thing a day. If you do one small thing a day, and maybe it's a big thing a week, get one thing done a week. It's still better than having amazing vision in your head but not executing it. Yeah, I think that's definitely how I've executed visions over the last couple of years.
Yeah, and I think the result of that is there for everyone to see. So I think you guys have done an incredible job, and through some pretty tough times in terms of what you guys have done and some of the mixes you put together, it really is incredible, and it's just transforming the retail sector. And I'm going to circle back to that whole thing, what you said about mentorship and upskilling, because I think that is the big thing, is that there are so many opportunities for mentorship out there, and people who want to pass on knowledge, and people who have been through the hard knocks themselves. So definitely something I want to cover at a later stage in terms of how do you guys all go about mentoring, and what are the opportunities for women out there in terms of forums to bounce ideas up and upskill, but we'll get there. Pam, we touched briefly on retail, but just on the residential sector, I know you guys have been involved in quite a bit, but just a bit of context for viewers. So Pam's team, which is probably 90% women, have done probably in excess of about 5 billion in residential sales in the last 6 or 7 years, and which is remarkable, through highs and lows, through COVID and so forth, and broken a lot of records in the process. But I think, Pam, just the first question is what are you seeing when it comes to buying behavior, especially within women in the property sector at the moment?
Wow, Steph. For me, it is, we see very empowered women. I obviously deal with the higher LSM market. So young entrepreneurs, young professionals that are starting their portfolios off early, single women that want to have build on their portfolio. We've got a lot of that coming through, and women are becoming bolder and more decisive. Previously, it'll be in conjunction with a man, and that trend is so much changed in the market. It's really, there's a whole new trend that's taken place, and it's exciting to see all these women coming in with so empowered to be able to spend their money and choose their portfolio with us. So that behavior trend is very dominant, very exciting to see. Speaking to banks and all the different lending institutes, when you go and look at the stats and having consulted with our various service providers, they also are seeing a huge trend in terms of women getting more qualifications with funding and so forth. So definitely very, very strong trend in the market, and for me, it comes from more women in the marketplace, more the gender roles of women being powerful in the marketplace has changed. And that's coming through with our investments at anything from 3 million going up to 30. So we've got quite a high end market, and for me it's more the corporate or the young professionals and entrepreneurs in the market. I predominantly do the Durban area and Johannesburg, Durban being our biggest player, and it's amazing to see empowered women that can conclude purchases of this nature.
And I mean, I think just to add to that, I mean, there are quite a lot of stats going around at the moment, both from Lightstone and Uber. I mean, Uber released some stats this morning, but I mean, just to go to what you're saying, so there are about 7 million formally registered properties in the country at the moment. About 3.9 million of those are owned by women, either on their own or with someone else. And 11 years ago, that was 50%. So it's been a significant growth in the last 11 years. And I think what I found most fascinating, what you were saying earlier, is that women are buying sooner than men, which means that there is more forward planning, more proper understanding of what builds wealth, which is a huge thing. And historically, that 77% of women purchasers were taking bonds, whereas 84% of men were taking bonds, which shows that women were a lot more conservative in their approach. But I think now that is changing, where a lot of women are understanding the benefits of gearing property and leveraging bank financing and so forth, and becoming a lot more aggressive in their approach, which is wonderful, and trying to find a mix between the two. But it just shows how women really are dominating the property market. And I think discussions like this, if we can unlock more of that, it's wonderful for the industry as a whole.
Now, I also want to add there, Steph, they also see it as a very stable asset. You know, your capital appreciation in property is obviously far more than most investment opportunities that are out there, in terms of the low risk and the higher yields from a capital appreciation point. So that also I've seen is being quite a dominant factor, other than first-time buyers when people are doing acquisitions for portfolio additions. So that is something I'd like to highlight as well.
And then, Kakhela, I'm going to come back to you in a bit just now, because I also want to unpack the entry-level market, because there's such huge opportunity and depth in that. And I know that's an area where you've got a lot of expertise. I just want to bring you in from a retail perspective. I know there's already a question about what a REIT is, so I'm probably going to ask you a follow-on question about that. But I mean, in terms of Liberty 2 Degrees, you guys manage some pretty significant shopping centers out there, which are almost, I guess, a little bit like the barometer in terms of what's happening in the retail sector. So your half-year results, super positive. And what does it mean for the retail sector as a whole going forward?
Yeah, thanks, Stefan. Yeah, we released our interim results at the end of July, and we were really pleased with the operational and financial performance of the portfolio over the period. And looking at the operational side, which speaks to, yes, we do have different classes of assets within the portfolio, but we are more retail skewed. We are a retail focused fund, and we have different retail assets, but more skewed between the larger regional and super regionals as well. So, looking at the operational data that came out over the period, it was really encouraging to see, across the board, turnovers up, foot count up, occupancy levels being well maintained, and our reversion rates, reduced significantly as well, improved significantly. So I think for me, looking at that, I think it spoke to the performance of retail within the operational landscape. It has been a muted domestic economic environment over the last period, but even coming out of the peak COVID period, I think there was a lot of question about whether retail is dead, whether your retail shopping centers are dead, whether people have gone back to convenience. But I think that's shown. What's shown and what's come out in the last 2 years is that no, it isn't dead. The South African consumer is someone that is quite tangible. They want to touch and feel. You want to spend your time in these environments. And I think when it comes to landlords and property developers, it is to provide an environment that excites and entices consumers to want to be in your environment and provide them with a tenant mix that, you know, wants them to actually come and spend their very hard-earned money in your environment. So I think retail isn't dead. It is actually performing well, but given the backdrop, you know, it is quite mixed. So it is very dependent on how you manage your assets, the quality of your assets, and the tenant mix that you bring forward, and whether you're able to meet the customer needs in that environment. You know, it isn't a cut and paste. It is bringing it to the consumer in that area and what they need. So yeah, I think from a retail perspective, things are looking better than it did over the last few years, but we still have things like load shedding and the power crisis in South Africa. So from that perspective, you know, that brings in another element that you now need to consider, keeping your shopping centers operational during all times, and cover for load shedding, have generators and the like, and be able to fund that as well. So it does bring a different element, but it isn't, you know, it's a dynamic environment. You have to be able to work within what is in the environment. But I do see retail performing well, and the larger centers definitely making a significant comeback. And I think it's, you know, growth from here going forward.
But it's also interesting. Can I just come in there, because I've also got experience in retail. Well, across the large ones to now the small ones, because I'm now also focused in the underserviced markets. But to your point, especially that you have to solve for the environment. You can't plug and paste one center to the other. They behave differently, and I think if we don't have those solutions, you may miss the mark, and your trading becomes a bit more difficult. But
Oh, no.
No, I think we might have just lost Kakela. As soon as she gets back, we can.
Retail is, you know.
Oh, there you go. No, we just lost you there for a second. No, is she back? All good.
Am I back? Okay, there was a call coming in, so it does tend to overrule this, but I'll ignore it, it'll disappear. So it's one of those that you have to work on the soft issues so much, you know. Even a Tina is important in the retail spot. When I was back in my life, Sandton City was a very complicated asset. So you'll find people from, you know, you can tell that they're from outside and they're walking around very confused. And because it was my environment, I'd be like, where do you want to go to? And take them there. But, you know, if you don't just get certain things in place, it can irritate the shopper. So it's a very exciting but very complicated, but you gotta make it right. You can't just run it from the office sitting somewhere. You gotta be making sure that even as an asset manager, you know, you involve somehow in the asset. Yeah.
Marianka, what are you seeing on your side in terms of trends?
I wanted to reaffirm what was said, especially regarding the retail trading better. I'm also seeing that with a lot of the renewals. You know, when we start looking at their turnovers, we're having less of we're not making it, you need to help us, come to the party. It's not just a landlord game. We need to be partners. We're seeing a lot less of that. The tenants are actually saying, specifically after the rough period we've been through, and in South Africa never seem to not get through completely. There's always something new going on, but we're seeing a lot more tenants telling us that, listen, we're trading a lot better. Our numbers are up. We want to renew. So that's definitely positive. But my biggest point was just to cement three, is that it's all about how you manage your asset. And she said it, and it was just said again, if you don't work your property, whether it's residential, whether it's your own flat that you've just bought, whether it's a massive Sandton City or small retail center, you need to live it and you need to breathe it. And that's something that I think Liberty 2 Degrees does exceptionally well. You know, always at the front foot of saying we're going bagless, we're working towards a future that's good for the environment, but it's never just about them. It's always about the bigger environment. And I think that's something that it inspires me greatly to see that a listed REIT can be such a forward-thinking REIT, you know, and I think that's got a big effect on why they would have performed as well as they did. It's how you manage your assets.
And does our retail sector adapt pretty fast to global trends?
Sure. I think from my point of view, I've got a biased view. And, I think these type of things that we do, we need to be quite honest around what's really happening on the ground. We adapt quickly. I always see international trends enter South Africa quickly. And just a few examples is we're seeing a lot more green spaces coming through. So natural spaces, lifestyle spaces. So a few years ago, it was called entertainment. And then it was called, I forget the word now, but sort of life. Yes. And now we're seeing more lifestyle. Like we want to make your life part of our retail center. So it needs to be a very comfortable space for you to move in. So I definitely think we adapt quickly. I just also still see a lot of copy and paste in our retail, and it's impossible. Even we copy and paste, and it's impossible to break that because a lot of the big corporate national retailers have a model, and unless you have them, you don't have a center. So it's always, to me, it's always the one sort of challenging the other one. Is you want to break the mold, very difficult to do because you're not dealing with individual entrepreneurs. You're not dealing with the owner of the business. You're dealing with a massive corporate that has a lot of tick boxes. So we push the boundaries a lot, and it's also different. You can push the boundary with a boutique shopping center in a very nice area that's got limited space in pushing those retailers and entrepreneurs to do something special in their store. But when you get to more rural township developments, and you get your copy paste sort of national tenants, it's a lot harder to break that mold. So I think we are at the front foot, but I think there's still a lot of work in South Africa to break the molds.
But Marianka, I think you raise a very important point because you do want to break the mold. I think what's influencing investors and developers is that when you go to get funding, you have to come with some big number of national, 70-80%. So that which you mentioned becomes difficult when the funding terms come with that condition. And we know that this market is got a few national players who dominated in the different space. So you raise a very important point, but the challenge is exactly that. I mean, even myself, when I come across a retail opportunity sitting in some rural areas or underlying semi-rural, the first thing I look at is, who are these tenants? But maybe in that area, those tenants work. Maybe there's some of the nationals don't work in a specific market, but that funding is what's holding us back because we don't have the money. We need the money from somewhere else.
I agree with you 100%. And I think, when I was thinking about this, the biggest thing is if you want to do something unique, you need to throw TI. We call it TI. It's called tenant installation allowance. So you give the tenant some money to spend on their store. So when we want to do something extremely unique, what you'll find in the discussions is you'll offer the tenant a rate per square meter. For argument's sake, let's call it 1,000 Rand over 100 square meters. So you're giving them 100,000 Rand to invest additional capital into their shop. That makes it extra special. But often the unique we're looking for comes at a price. And already our margins in retail are extremely under pressure, especially because of that 70% national target that you need to meet, and that the banks require that. So you're almost sort of swimming upstream the whole time. And yet I think if you fight for it in every little thing, whether it's a barber shop where you sit with that entrepreneur and go, I don't want a standard barbershop. I want a beautiful barbershop. How can we make this more special? What do you need? And I think there's a lot more mentorship in the retail space that needs to happen, where a 20 square meter tenant gets a lot more attention to detail in helping them operate their business model a lot better, which is beneficial for not just them, but also for the developer or the landlord. Because if they make money, you make money. If they stay, you stay. You've got a tenant. So I think there's a lot of that happening. And we also definitely, last point, is we're seeing a lot more local flavor. We're definitely seeing investment into local brands. We're seeing local handbags, shoes, etc., featuring everywhere, and they're getting a lot more screen time or floor space. And specifically what we're working on in a shopping center is to look at, if there's 50 squares that's hard to lease, how do we split that up maybe into 15 to 20 square meter shops at a nominal rental to introduce those brands into a shopping center, because give them the platform. If provided they have the right product, you are now instilling entrepreneurship and opportunity into someone that's already good at what they do, but couldn't afford the opportunity previously. So I think, yes, I'll stop there.
No, but I think you guys have summarized it really well. And I think the biggest thing that a lot of people don't understand is the major catalyst that retail has when it comes to all forms of other developments. And I think we're seeing a lot of retailers who are looking at how they unlock residential, for example. We're seeing some of the best residential products at the moment are ones where the retail is almost the anchor. It takes the burden off the developer to deliver certain facilities, because now all of a sudden you've got a barber shop and you've got a gym and you've got all those elements into it. But it almost just seems to be a new phase in unlocking residential and commercial and other opportunities where retail is the pillar. And I think it's I think we're fortunate. We've got some great offerings there. Kim, I just want to push on a question from you that's come through from Kendall in terms of what is a REIT, if you could just explain it.
Yes, certainly. A REIT is a company that derives its income either through the ownership or the development of income-producing assets. A REIT benefits from special tax considerations, and it offers investors exposure to real estate through buying of shares.
Perfect. And then I just want to ask you, so I mean, obviously, looking at investments is what you do and what you've been doing for such a long time. I mean, how does one know when to buy or dispose of an asset? And I'm talking about both from a business perspective, but also from an end user perspective in terms of what signs to look out for in the market.
That is the question. We generally would need to have a good understanding of property as an asset class. Property is a long-term investment, and it comprises capital appreciation, as Pamela mentioned earlier, as well as your return on your investment. So within the property sector, you have, or within the property umbrella, you have a number of sectors. For example, industrial assets, office assets, retail, hospitality, even specialized assets or residential. And each of those sectors have a property clock, which is essentially they may have different factors that influence each of those property cycles. And it may, for example, be a good idea or a good time to buy industrial, but not necessarily a good time to buy offices. So it really depends at looking at all of those factors when you're considering buying a property. And of course, the overarching factor is the market conditions. What is happening in the macro and the microeconomic environment in which that asset is located? What is, for example, the economic indicators pertaining to that asset? Where are we in the interest rate cycle? So it's a number of factors that you need to consider, which would equip you to know when you need to buy which specific asset, and of course at the correct price, which is possibly a whole nother webinar, is buying the asset at the correct price. And then in terms of disposing of assets, usually you would potentially consider disposing of an asset when you believe that asset has reached the end of its life cycle, which essentially means that your returns, you believe they may be stagnating or even deteriorating. Another factor of why you would potentially dispose of an asset is because it represents risk in some way or other, and it's not something you'd be prepared to take on, and you potentially look to dispose of that asset. Alternatively, it could also be a factor of a better capital allocation strategy. You may want to dispose of a specific asset and utilize those funds to buy a better quality asset in a better location or a higher yielding asset.
Steph, you see my face on the screen?
No, you look like you're hiding from us.
Okay, I'm gonna ask that I leave the meeting, rejoin, so that you can get my face again. So just excuse me for a few minutes and continue.
No problem at all. Pam, I think just following on from that, one of the questions from Ron Preston is, what advice would you give to a first-time female buyer within the residential space in terms of advice up front?
Well, for me, it is obviously, and what people have been looking for, and we structure our products around high levels of security. That just helps with your capital appreciation. Gated estates, freestanding homes, those have become quite a trend in the market currently. You know, people are looking for property or estates that have facilities. You know, after lockdown, obviously the script was rewritten. We had to look at bringing in developments that looked at having all your facilities and amenities at your fingertips. And I think those are performing really well. And I'm finding that the demand for those are massive. And with what Kim's just outlined about offloading and buying anything new, we actually had a massive uptake. I mean, we've done 2 billion in sales in the last 2 years, purely from post-COVID and people wanting to sell up in environments that was not conducive to the pandemic, looking for something with more freedom of movement and being able to have that lifestyle and quality of life that is more inviting, which would be your little parks within an estate, clubhouses, the gym, a shopping center at your doorstep, which makes life more flexible and freer. So also the developer is very important. Credibility, the location. When you invest in, you've got to look at future capital appreciation and going and researching the area, researching the developer, having a look at values of properties in that immediate location. Those are important factors when you are buying. So offloading doesn't become a big thing. It actually becomes a value add to your portfolio that you want to keep. And then some projects that we've done, your capital appreciation is anything from 15 to 40% in the last 3 to 4 years. So for me, that's a phenomenal growth. And if you take all those, I've highlighted only a few factors. There's tons more I could. It tells you that you've got to be a savvy buyer, got to do some research, and everything's available online. So I think I've touched on most of it.
And just a question that's come through about interest rates, always the golden question: should one be investing while interest rates are perceived to be higher?
Sorry, can you repeat that, Steve?
No, I'm saying just a question that came through with regards to interest rates, which I guess is always going to be the question. It was just basically, should one be investing when interest rates are high?
That is quite a, not an easy question to answer. We obviously have had so many interest rate hikes in the last 6 to 8 months. We found a little bit of a lull in the market, and then there's been a massive pickup. So you never know with the economic climate when that's going to change. Being in South Africa, that is volatile. It's not something that can easily be determined. However, that has to stabilize at some point. And I was having a chat with one of our very big investors a few days ago, and he said, why is the upswing suddenly up again? The markets, the interest rates are at their highest, and the market is doing so well. Residential suddenly picked up in the last few months. And I said, purely because we gain market confidence again. And that's what it is. You're going to have those hikes. You can't determine when, at what interims that's going to change. So if you're finding that there's value in what you're going to buy, or you want to invest in it, there's value in it, you see the value, and you've got to do it when the time's right, because the cost of building and the cost of what that product is going to be at a later stage is not going to get lower, it's going to get higher. So you either take the knock, take the risk, do it, and then see what happens down the line, and then you can recalculate and change if you can. For me, it is about making that bold move, and there's always going to be element of risk, and we cannot read all of those risks. And I found that we've actually done phenomenally well in the last 3 months with interest rates being at the highest. So at some point, the market confidence is going to come in. and you've got to continue with life. So
yeah, I think it's a fact. Transactions are happening. They're not happening just because. I'll tell you what. One of the things I've picked up as a trend is that in the case where let's say you are getting money from a pension fund or from institutions, and it's a lot of money enough to be buying assets without debt, they may take a position that in the short term, don't use debt, but because there's also refinancing in a couple of years' time when interest rates are down. Unfortunately, and I think Pam, possibly that the market that's highly hit by the interest rates is those like the middle income. That's the stats I read. So, like, and I agree totally with you is that if the opportunity is there and the value is right, you're gonna get into it. Not everything is perfect in investing. There's always risk of something. But you must just also caution yourself that you don't buy very expensive with the rates being as it is. So there's a bit of cleverness that comes into it. I'm sure, Kim, you've seen all that also in your life. So we can't stop life, yes. But it is a reality and it does impact the market to slow down because people are not taking that high risk. It's not as, but it will turn. It will turn. As always, we've seen the circles. 2008 happened. The other years happened. I think 2018 happened. It's a cycle of property. Everything can't go up all the time. Things have to balance out.
And I just want to reiterate, your building costs are not going to get lower as the years, go ahead. So if you think, okay, the interest rate's going to be there in a year or two, you're still going to get caught with that escalation in your building cost, which your purchase price is then going to be on a higher level. So you're never going to quite win. So like we said, if something's suitable, go for it. Take the risk, make a calculated risk, do your research, and you always will get good guidance from either colleagues in the industry or other investors. And there's lots of blogs online that will give you, market trends and very sound advice. So you've got to do some research.
And I think just to, Svente, I actually want to ask you about how you build a portfolio, but I think just on the interest rate thing, I think I always say this: there's good debt and there's bad debt. Bad debt is credit cards and various other things, overdrafts and so forth. But good debt is property investment debt that you get through banks, which gives you the ability to leverage property values. And we all know interest rates are going through cycles. But I think the positive thing is the results were released in the last couple of weeks, where we've had 4 months of consecutive disinflation or negative inflation. And generally we know that interest rates are there to curb inflation. So it really looks positive in the sense that we probably will not see another interest rate hike. We will see the interest rate coming down. So it's the perfect opportunity for people where different economic factors are stacking up quite well at the moment. But we always know that good property investments will totally outweigh interest rate hikes or interest rate fluctuations. So no better time than the present, as you said. Samantha, just from your side, in terms of building a property portfolio and knowing how much to diversify, what would your advice be around that?
Yeah, Stefan, I think that obviously it is different for each person because everyone has their own risk profile and their own time horizon. So it can be completely different for all of us sitting on this panel and completely different for every consumer. So you have to take each person's individual circumstances into account. But I do think it's something that has been mentioned already by a few of the panelists, and whether it was from Marianka in terms of starting a business or Pam around residential, it's about start somewhere, start small. Whether you're buying into listed REITs on the stock market and trying to build a portfolio through there, even if you have 100 Rand a month or 1,000 Rand a month, start somewhere, start investing, and that's how you get the growth over time. And the same thing with whether it is direct property as well. You can start off small, use some of the tips that Pam has given, and start off with that first property, make pay off towards that, use that as your leverage for your next property, either rent it out, get an income. And it's about taking those incremental steps to building that sort of generational wealth that you do want to create. And it's about starting off slowly. And what I think is a huge thing that comes with that is trying to educate yourself and get as much information as you can. Whether you're even using a financial advisor when it comes to the listed side, but still know the terminology for yourself. Understand what your options are, understand what your financing needs are, what your financing options are, so that you can have an informed discussion. And also so that, like they mentioned, every decision has a level of risk and it is different for each person. So it's about making an informed decision based on the information that you have, and taking that first step towards it. As you build your portfolio, thereafter, you can diversify given your investment needs and given the timing of the market. But it would definitely be, get as much information as you can, research, and start small so that, you build up over time.
Yeah.
And Kahela, I mean, how does one go about upskilling? We spoke about mentorship and upskilling. Like, what are the platforms? How would someone learn more about property investments?
Geez, I'm one of those people that they call me a serial networker. It's you can read, right? You can read Rhoda Report, you can read MSCI, Sapo has got information. There's various shopping center council releases some information, Lifestone we've mentioned. But you gotta also be speaking to people. This session is important. How do you then find out about things that you can't read about? The hard stats. How do you, if leaving here, are you gonna ask Steph to say, can I just reach out to one of the ladies because I've got a blockage and I need to upscale? So I'll give you an example that I'm picking up in the market. So we think that only as property people can play in the space. I'm discovering a lot of women, particularly, I don't know why the trend is more towards women. Maybe there's more of us who they live in wherever areas they live in. They've discovered a piece of land. They can see the opportunity. They've never done this before. They go and start the work. They get the town planning done. They go and speak and they acquire the land, whether it's a lease or not, and then they get stuck. So what happens is that they need to find people like us who've got the experience in the industry to help them to unblock to the next journey. But they couldn't have done that without having gone to meet up with a Pam or Kim somewhere to say, look, I've got this problem. I don't know what to do. Oh, I know Mariaka. I know this one. I know this one. Maybe you must speak to this one. This is how then, as a network, we help each other within this industry. The beauty about the property industry, whenever people from outside other industries come, they're like, guys, you guys have fun. You all know each other. Because we knit. Yes, there are groups of people who've got their own little cliques, but ultimately those cliques, one person knows the other clique, and collaboration. That's how you upscale as well. So you start with where you put money in the stock exchange or unit trusts, and it builds value over time. Eventually, you've got a couple of 100,000. The five of us can say, hey, look, there's an opportunity in some residential opportunity. It doesn't require us to put it in to bar. We can take our little money that we've started with and then collaborating our monies together. They say 0 of nothing is worse than 5% of something, right? So I think there's collaboration you must also do as women as well. But be bold. And the worst thing I can do is say, I don't have time for you, right? But maybe the next person will have time for you, or I'll refer you and say, go speak to whoever. It looks intimidating, but actually, once you start, I like the start continuation to it. It gets easier. It gets much easier. And don't be scared that no, not everybody will say no. My first time when I started in the industry, some woman actually made me cry. Imagine calling them a broker. And my bosses said, don't worry, she's like that. It made me feel better because I'm like, why are you so mean to me? It's like, no, she's always like that to people. And if you can't handle it, it becomes a bit intimidating. So don't take things personally. You'll find the friendly people who will help you to upscale. But collaboration for me is the key thing in terms of how you're going to go up without going into details of how to do it. Pick up that phone, read about people, but don't hunt them either. Don't let them block your number.
Yeah, Such good advice. Sure. I really love that. Steph, if I can just add,
Yeah.
I sometimes think in our minds, we think people that we want to ask for advice are too successful to ask, to bother. When in fact, an entrepreneur or a person in a big REIT, like they work their way up. They worked hard. They grafted the same way you're trying to graft. And most of the time, it's really just a question. And I always say exactly what you just said is, even if the answer is no, I'm still where I am. But maybe the answer is yes. And then I'm a little bit further than what I was yesterday. So the chance you take, it can actually only be better than what you are, or the same. It's never worse.
Hold on. Can I just ask a question from Andise, because it's just such a good question. So she says, I'm a recent law graduate who's currently unemployed. I'm passionate about property. Where can I start? Would buying land in a rural area and building residential property be smarter than buying a flat in an urban area? I mean, it's a really, really good question. I mean, I don't know if any of you want to tackle that.
I want to, because I'm very passionate about this. You know, I think it goes back to what was said before about your risk appetite and where you are, right? The thing about the development, I'll give you a stat that UCT did via their research platform, where they said, and they use Cape Town as an example, but it happens here because I've also experienced it, is that it may take, since you first acquire the opportunity to build, it can take you between average 6 to 8 years to get that going. And even then, you must still build for a couple of months, get the tenancy, and then to service the debt. So you could end up looking at a period of 12 years before you actually get anything from a development. Now, do you have money in the interim to go through, and then the risks associated? Maria, we mentioned the risk around a development. You'll find cost overruns, escalations, things you didn't foresee. Professional teams may be, because they work at risk, we may get the B grade, which we're not going to give you the right product. There'll be money loss. So it's a matter of cash flow and wealth creation. With an income producing, you're able to realize that income easier. So I think if it's possibly your first time, I would advise more towards that flat that will give you the money to grow. Take that money from that flat and maybe diversify into a development. If you're looking at things like the REITs, Kim and so what they've got is they've got limited percentage that is new developments, with a bigger that is more of income producing, because they need to give dividends to their investors. So I would say that to her, that depending on her risk, she must understand that development is a risk, and also who is she going to partner with to do that development. She needs people who've done it before. But at least with buy income producing, it's about getting a credible property manager, person who's going to do the leasing, get your debt. It's a less complicated, and you can grow from there and then get into the fancier stuff later as an entrant. But I'm also like all women, we don't really do risky things like men do. So we also tend to be more cautious and start with the comfortable things. And once you're comfortable, you understand what property works like, then you can take a bite into the bigger things. But also, there's nothing wrong if she's got an opportunity, like I'm saying, in the rural areas where she can come to people like us and say, help me deliver. There's also that opportunity. I've just given the different scenarios. Is each person's appetite risk? If she does have a lot of money that she can tap into, maybe a development will be good to go, but it comes with its risks, very high risks, yeah.
And guys, if someone's sitting with land and they've got an idea, how do they find partners, or how do they go about finding partners? Is that a very loaded question?
That is a loaded question. That's often the hardest, and it comes back to networking. It comes back to networking. Like, you don't just partner with anyone. You need to know who you're partnering with, and there needs to. I think that's probably been one of the biggest obstacles that I've had. You know, we spoke a lot about making this real, and that is definitely one of the hardest things, is to find really good partners that have a like-minded approach to where you want to go. Yet you're a minority shareholder, and you ultimately just might sit in as a little fish in a big pool. So I think that maybe comes with time and a lot better relationships, where you know people in the industry that do things, and it's just the right person at the right networking event and it aligns. It naturally aligns. But I probably shouldn't have answered that. Maybe someone else wanted to help
I
out.
just want to jump in there, Steph. It's very basic. You've got to get the fundamental skills of the industry in place. I know Andine's is the better name, is a law graduate, and for you to understand the industry, get the fundamental skills to get it going, get into a real estate company where you can acquire these skills for mentorship. And then if you have an idea like this, and like was discussed earlier, it could be a lengthy process of close to 8 to 12 years before you could get it off the ground. So acquiring those skills, and if you need a partner, they're going to take you more seriously because you know to talk the lingo and you've got a little bit of background. And anyone that is going to take somebody on as a partner wants to know that they know something about the industry. So jumping and diving right into something big, if you have the money, it could work. But if you didn't and you need the support of strangers and investors, you've got to know what you're talking about. So you've got to start at the bottom. I've always said to everybody that I've met that's looked for advice, there's no easy road to success. You've got to start at the bottom and work your way up. And there's no better place than understanding every rung of the ladder. And then when you get to the top, you know how everything works. And it's so coherent thereafter. I mean, it's simple advice, but it's worked for me. And I think it is fundamental skills are the most important.
No, it's spot on. And Kim, I just want to ask you, it's a question that's come through about how do women collaborate more? I mean, what are the platforms? We all speak about networking and also, but what are the platforms out there for women in property to spend more time chatting to each other?
There's the first one that comes to mind for me, of course, is the Women's Property Network. I think it's a fantastic organization. We get together regularly. I am on the committee. We do some fun activities, and it's a fantastic way to spend time with other women in the industry. We normally have like a keynote speaker or somebody who's inspirational in the industry, and it's really top of mind for me. There's also Business Engage and the 30% Club, who are also doing fantastic work to promote women in the industry. And I wish there were more, but those are 3 really, really good organizations.
Okay, and are there any, in terms of other panelists, any other platforms that people should know about?
There's also, so Kim definitely mentioned the ones that are top of mind. I think for the younger women, there's also the Youth in Property Association, YIPA, which is, I think, youth managed and advances the interest of youth in the property industry as well, which is something that they can engage with as well. And I think, when Kim spoke to, and when the other lady spoke to networking and things as well, I think in terms of networking, I guess, you get advice and guidance from everyone, but there are great mentors within the industry. And it's not just about one person. There's so many different individuals. So, you can actually gain a wealth of information from actually gaining from others' experience over time. So I think the Women's Property Network has really branched out from when Kaihelo had said, how it had started off, and now it has a great reach across the country and across different pillars. And then I guess there's also the other property industry bodies, such as your SAPOA and your SA REIT and things like that, that can also, offer more information.
May I also add, Steph, briefly as well, we've also got the South African Institute of Black Property Practitioners. We talk about transformation earlier, and it's not enough. Even for women, transformation is not enough. So I sit on the policy com for it, and we've just produced in June what we call a funding directory. So in there, we put in sort of a template, like a telephone directory back in the day, where we've got basic, very standard information around the different funders in property, including the banks, the DFIs, some of the MES funds, as well as some specific products that we have. It's still growing, but I'm just encouraging that if other people also want to go and maybe look at membership and other things, there's that piece of work which is very important. It's the first in the industry, and I'm hoping that, well, maybe not the first 1.5 version, but that people can then go and see that they can go to, the lawyer lady. You can go to institutions to go get the funding to get your schemes done. So there's much more information now that we must tap into, and the different organizations can offer that. But just do your homework, see which one fits for you, because you don't have money to be at everywhere, like also costly. So just look at the one that work for you. And as you progress, you'll also meet somebody who's sitting at WPN who also sits at CyBib, and you can get those collaborations. You don't have to be everywhere if you don't have the money.
But I guess to summarize that, it's about be prepared to put in the hard yards and having the courage to sign up for something like that and arrive, even if you are lurking on your own for the first few, just to put in that effort, because I think without that effort you don't build up the network. And like you guys said, at the end of the day, network is everything, and I think that really is the way in which people progress, understand more, learn more, etc. And I think probably the one takeaway for this would be, don't be afraid to get out there and learn from as many people as possible, but you've got to put one foot ahead of the next, I guess.
Yeah.
But yeah, I think there'll be a lot of questions that have come through now, and apologies, Mandisa, Cabello, Jennifer, probably not going to be able to get through all of those, but what we will try and do is maybe see how we can direct answers to you. Maybe we'll chat to panelists directly and see how we can get that through to you. But there's definitely enough content here to do a second follow-on discussion, and even just answer a lot of the questions that have come through towards the end. How to get involved in WPN, probably portfolio questions, pros and cons, various different things, which we unfortunately haven't had the time. But I just want to again say a huge thank you to everyone who's been part of this panel. I mean, we could literally do a webinar with each of you on your own in terms of knowledge base, but I really hope that those who've been part of this have taken something away in terms of some courage, some insights, some passion, which you all ooze in huge amounts. And yeah, like we said, we'll be sending a recording of this. And yeah, it's really here. Like you said, I think there's so many positive things in the property sector in this country. And we must cut away from the clutter of negativity and focus on all of that. And there's such amazing pockets of that across all different sectors. And I think today is really a celebration of that, and a celebration of the women who really are transforming the industry one day at a time. So thanks to all of you for your time, and I hope all of you have a wonderful Tuesday evening.
Thank you.
Thank you. Thanks, Dave.
Thank you.
Cheers, guys. Thanks again.
Bye.
Bye.